Hello traders and welcome to another video review. Today is Thursday, February 17th, 2022. Let's take a look at the Forex calendar. Data from Australia has dominated the overnight session. Unemployment rate was in line with the expectations, 4.2%, and at the same level that previous reading. Employment change has increased to 12.9 thousand, which beats the expectations of zero. So basically it's slightly better than forecast, but still way lower than last reading on 64,800. The same situation was with the part-time employment change. During the London session, we don't have too many data that are actually market movers. We got trade balance from Switzerland, not actually meeting the requirement of 4.23 billion with only 3.18 billion actual reading. We have trade balance from Italy, and then at 10 o'clock there's a scheduled release of ECB economic bulletin. During the New York session, we got plenty of data that might be potentially somewhat market movers. ADP non-farm employment change and Virgin Securities purchases from Canada, both scheduled for release at 2:30, and at the same time we got data from the US, building permits, housing starts, and Philadelphia Fed manufacturing index. From the job market, we got unemployment claims and continuing claims data. During the evening, apparently we got the FOMC member James Bullard and then FOMC member Loretta Messner that give us some kind of a speech. So Thursday looks pretty interesting. I don't think there will be plenty of the market movers today, but you know how it is on the financial markets, you never know basically. So let's take a look first at the Australian dollar technical chart. Daily timeframe chart of the Australian dollar looks very interesting because we have a breakout to the upside. After a false test and breakout to the downside below this short-term trend line, market reversed and is currently moving higher above 7,179, which is the technical resistance, and it looks like it's heading towards the key short-term technical resistance, 7,252. So right now this is how it looks like on the Australian dollar. That's the channel. Can we have some channel here? That's the newest channel here. Maybe we should extend this one to see whether there will be a relevant test. So let's just extend this one, and this is how it looks like. I will just switch the colors so I don't want to get you guys confused. The newest one will be in black, so that's the black channel. So it looks like the current situation doesn't meet our criteria for the down move. So right now this scenario is invalidated. So what's happened and what can happen now? The first thing is that the market is rallying towards 7,252. If this level is violated, then around 7,278 there is another technical resistance, and there is as well lower channel line. So right now if we break above 7,278 and back above the lower channel line, we are back in this channel, and that's very, very bullish. However, if again the market will be capped at 7,252, that might make a kind of a double rejection pattern, and then we can reverse, break below the lower black channel line, and then go of course lower. So right now that's the situation, that's the scenario. It looks pretty stable, this move to the upside. We broke above the level of almost broke above the level of 16. Now it's 56-57 points on the RSI. So it's a strong move, and there's a plenty of room here for this momentum to expand. However, again, 7,252 first level to watch, 7,278 second level to watch. Without any violation, sustained violation of these two levels, we cannot say that the bull market resumes on the Australian dollar. We got some data from the US, so let's take a look at the USD to the Swiss franc. USD and the Swiss franc doesn't do much these days. It's been trading inside of this trading range for a couple of days, with occasional spikes towards 9,295 pips. So this is the current technical support, the immediate technical support for the market. 9,177, and as you can see, we are trading here inside of this very narrow zone, not doing much and not trading a lot because of the limited volatility. However, it looks pretty stable inside of this blue channel for the US dollar index to move higher and higher, so looks kind of promising. USD to the Japanese yen, what is going on here? So double top, as I can see, a double top pattern, very interesting. First we got this rejection here, 116.37. Then we have the second rejection, bearish engulfing pattern, the same level, 116.37. And now what we can see here is a down move towards, I think, the lows of the 14th of the February, around the level of 115. Inability of the market participants to move back up again, and on the daily time frame chart of this USD to the Japanese yen, we got this short-term, very short-term trend line. Maybe it will help to define the risk to the upside. However, for now, we are making some sort of this very skewed triangle with the horizontal support around here. So this is how it looks like right now. It's not a pennant, it's not a kind of a flag or anything like this. It doesn't look like a triangle yet unless we put it like this, then maybe. However, I would like to keep this line flat because of these two levels here. And if I'm not wrong, and we will find out in a minute, this will be some sort of the Fibonacci. There you go. This is our relation. The wave, let me just put it on the chart quickly. This is the pattern. This is the A, the B, and that's C. Okay, so we got only three waves here, and the length of the wave C is equal to the length of the wave A, measured from the low of the wave B. Classical market geometry pattern. So please be careful with the US dollar to the Japanese yen. It might break to the downside. Okay, and then of course technical support 115, 114.74, and the lows of the wave B, which are somewhere around the level of 114.18. The key technical support is located at 113.50, and this is the line here. So that's the US dollar to Japanese yen. Let me just take a look quickly at silver. The silver market is moving up as we expected. We need to extend our line. However, I think we might even put some sort of the channel here, the parallel channel. If we do it this way, that's nothing wrong. Let's keep it like that. And this is, there you go. This is our channel. So the silver market is moving inside of this channel, from the upper band to the lower band, no close below the lower band, then to the middle line, and then again, if there is a breakout, it will be the breakout towards the level of 24.67, or even again, please be careful with this situation here. There you go. It's around the level of 25, of course, 25.30. So please be careful with that kind of move on silver. If we break towards the second part of this channel, we can do this. Okay, the up move towards that level. So let me just put it on green so everyone can see what I mean. There you go. That's the silver outlook. Last but not least, let's take a look at Bitcoin. The Bitcoin market clearly having problems with this supply zone I've been warning about for days now. 61% Fibonacci retracement, supply zone between 44,000 and 45,429 is still playing a major role in this current situation here. So this is the second attempt. That was the first attempt. Now we got the third attempt. So let me just put it on the chart. There you go. Third attempt here. And question, can we afford this kind of candle like here, this kind of candle to the upside? Because that would mean the market is taking our channel and our level or even a zone seriously, right? So now we will draw a new channel. This is the new channel. Let's see how it works. It works pretty well. Even the middle line works here. So if we get above 45,429, we can surely stop somewhere around 47,228 and then around 48,000. So please keep an eye on any breakout to the upside on Bitcoin. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.